Markets with May. And as a thank you to a lot of folks that have supported me, I am going to cover GameStop's earnings report from yesterday. And it's, wow, the lighting is really weird here. Let me see if I can actually fix the lighting a little bit to make it slightly better. Maybe not. We'll see how it goes. Okay. GameStop reported earnings yesterday. And even though, it traded I think more or less flat on the day. I mean, it was down maybe 1% or something like that, which sometimes this thing is a massive runner both directions. It was a decent quarter, in my opinion, a better than decent quarter. I am going to go through the financials because I want to do it as a thank you to some people that have been really supportive on my Twitter account as well as on my YouTube channel. I do not have a position in GameStop. I'm always looking for entry points because I do just like the story and I like what the company's trying to achieve. That said, because it doesn't have an earnings call, I find it a little bit harder to get my arms around the numbers. I'll show you what I'm seeing, and then feel free to actually post in the comments because typically for most of the companies that I'm listening to, I probably learned about it in the past and then am revisiting it most of the time. Occasionally it's a brand new story, but it's more straightforward and I can hear some of the past calls in case the earnings are not straightforward to me. With GameStop, it's a little bit of a different animal. Okay, so let's go into it. Past performance not indicative of future returns, and like I said, this is really just me going through the numbers to help folks out who might be trying to read this themselves. So this was what they reported in earnings. Revenue up 2%. That's nice. I want to explain though that this is a turnaround. So what I'm really looking for, even over and above revenue, is profitability. And anytime you've got a turnaround, a lot of times the profitability, the composition of what's going on is very important. So here we've got revenue up 2%. That gross profit is up 8%. Now, when gross profit is higher, an increase quarter over quarter versus revenue or year over year versus revenue, that means that you're getting margin expansion. So that's a really good sign for any company that's trying to do a turnaround because that's really what we look for. And operating loss, much smaller than previous, which means that it's actually a pretty good circumstance. Now, when we look at the composition between the 16 loss and the 2.8, you see all these other things. You see interest, income, expense. So we'll dig into that a little bit. You see a loss before income tax, which is weird because they really shouldn't be paying any taxes if this is what's going on. That is probably coming from asset sales. So I did a confirmation of that and so on and so forth, but much smaller still. Because it's negative and because this is a turnaround, we really can't get away from looking at the balance sheet and understanding what's going on with cash flow. So cash flow statement and balance sheet, very always important, but so vital when you're looking at turnaround stories, because what happens with the turnaround, let me share this with you. What happens with the turnaround is that the new management team has to take the assets that currently exist, sell off some of it, reorganize other parts of it, and figure out how to make what the final stub core company is profitable. And so we really, really dig into some of that cash. If you don't look at cash flow and balance sheet, is going to be this utter confusion because you're not going to realize what part is one time and gonzo and what part is a part of the turnaround and what part actually is the ongoing cost for the future, so you can start to visualize where this company's headed. So let's turn then, before we go though to cash flow and balance sheet, I do want to just talk a little bit about the nature of this revenue, because the revenue is only up 2%. So a couple of things we're seeing there. Hardware and accessories, I'm going to call that flat. 597 versus last year 596. Okay, so there isn't this big area of growth going on in hardware accessories. Software up 25%. All the growth is coming from that. Okay, that is amazing, but that has a certain rhythm to it. So we're really talking about what new video games are coming out. How do we want to think about this? What's slated? So if you're a gamer, you can stick it in there. If you know there's some big releases, what have you. It can really vary year to year, but it really has to do with exciting game releases, what you end up thinking about. Collectibles has been down, and I remember it being down earlier when I looked at the company last quarter, but I didn't really do a video on it. Collectibles has been down, and a lot of folks think that this is related to market performance, and particularly crypto specific performance, because a lot of crypto people do buy those collectibles. But what I think is important, there's some stuff in the notes associated with all of it. And also with collectibles, realize that unlike software and hardware, the impact to inventory is a little bit bigger. So we're going to show that on the balance sheet later. So that's how I look at collectibles. Okay. So it might just be too that they're winding down some of this inventory in a good way. But nonetheless, this is what it's looking like right now. Now, also, I want to show the geographies. I went ahead and did the percentages of what these are currently in 2023. So the US is 70%, so on and so forth. Europe is 15, the second biggest region. Canada, Australia, you can see it there. And this is 3 months ending 2022. So we're just comparing this quarter to last year at the same time so that we don't have the seasonality, because GameStop 100% does have seasonality. It is in the consumer space, and it does definitely tend to do really well on both when big releases happen, but because they oftentimes try to time it with Christmas, the fourth quarter is a bigger deal. We're in the second quarter right now, okay? So when we look at this comparison, you can see so you've got revenue down. Here's the revenue difference. So revenue down 4% in the US, revenue increasing in every other region. But then when we look at operating or operating income, operating earnings or loss, you see the US being profitable, but the rest of these areas unprofitable. Now, this is why I really have struggled to understand GameStop. It's not that it's a bad, good, bad, whatever, but if he would just have an earnings call, this would be the number one question. I'd really like him to clarify and explain what is going on outside of the US, because it's not explainable by just FX if you look at this. Maybe it is, but I need to see a better footnote if that's the case. But what's going on internationally that's causing the lack of profitability in those particular businesses? And the reason that I wouldn't just know is because you do have slightly different mixes of debt funding. You have a couple other things going on that for someone like me, I can't just see it right away. Possibly if you've been following this for a lot longer, you'll know exactly why it is that the operating income isn't the same as the US is at this point. That's something that if he just had a call, if Mr. Cohen, if you'd consider having a call, that would have been my question. Or maybe it's too basic. Maybe you can just put a little note in there in the future to help us understand the geographies a bit. This, however, I think the geography is more in the queue. I can't remember if I pulled it from the earnings release, but that's what's going on there. Yeah, you see that. And here's the other thing that makes it kind of relevant is because even though you saw operating earnings loss better in Europe, I would have liked to see this positive, given that revenue was up 28% in Europe. So what I'm saying is I want to understand, are you just like fire sailing inventory? And so this is part of the turnaround where you just need to get rid of inventory. And so you did it in Europe like crazy. So you didn't have to ship that stuff elsewhere. And so basically you went ahead and sold some stuff at a loss so that we could be fresh and perfect in Europe. What's going on is really my question there. Hopefully that helps you think about how to look at those numbers. Okay, EBITDA. Now, because we have an L, we got to look at two other ways of looking at earnings, okay? EBITDA is earning for interest, tax, depreciation, amortization. D&A, depreciation, amortization, that's non-cash. That ends up on the income statement because we don't want to pay taxes like crazy. So, of course, we want to take depreciation if we can take it. Interest income is baby for these guys because it's the debt. But I just want to show you we're just barely EBITDA positive. And the reason is because we're still paying people in stock versus paying people in cash money. And that's fine, quite frankly, because now there's some people that are going to be like, hey, girl, what about dilution when you pay people in stock? And I want to be like, hey, this is a turnaround. So quite frankly, when you pay people in stock during a turnaround, everybody's incentivized to move in one direction, number one. And number two, you don't leave, like you want that stock to actually, because it's part of your income, you want that stock to make money. So you're not leaving until that stock price is up. So I'm actually totally okay with how small 9.2 is for you to be able to then, get the company through it. So, but realize that without that, you would still be EBITDA negative, but barely so, right? Because we're already, even without the other stuff, you're at negative 2 million. It's not that bad. Like this tells you, hey, the reason it's not that bad is it's the second quarter. This isn't the quarter. You know what I mean? Fourth quarter is the quarter where we start to be like, hey, how we feeling about making money? there's tons of real retailers that every year don't do well in the second quarter, but do great on the other quarters because the nature how it lays out. You get Christmas and then you get post-Christmas sales, and people do the sale stuff. Okay. All right. So that's EBITDA. That's one way of thinking about how close are we to being profitable. It's not actually showing you much different from the income statement, but with all the mix of other stuff going on in there, you end up being adjusted profitable. Okay, whatever, right? Now let's look at the cash flow statement. Okay, the cash flow statement becomes really, really important. The first thing that I notice is this big red box right here. There's no more impairments that he's taking, except there's no more impairments. That's the top three. And then you've got this disposal of property and equipment. Okay, what's that mean? Number one, we're not writing down businesses that are faulty anymore. That's great. That's done with. And then the second one is that we are still selling off pieces of businesses to raise cash, to get more cash money in the bank so we can then do the turnaround. Okay. So there's a little baby hair of that because you can see it's less than whatever, it's less than what it is. I still have to comb through a little bit harder, but I would love to see maybe what the future plans are for disposition of assets. Namely, if there had been a call, I would have loved to have hear, Europe versus other areas versus what have you, given the lack of profitability in Europe. Like, it would have been really lovely for him to just have like a one-liner describing what's going on in Europe. Okay. That's all I'm saying. Now, the second little red box, accounts payable and accrued liabilities. This one we got to dig into because it is the bulk of what is making this net cash flow negative. All right. And is this a big number? Is this a small number? I'm going to say it's a reasonably big number where you can't let the accrueds go. I'll show you what that is so you can, think about it. Another thing I wanted to show you is purchases of marketable securities, because some people, I think when I was looking at different Twitter posts and what people were reading, were like, what is that? Marketable securities is happening on every single balance sheet right now, because marketable securities is basically them saying, okay, well, you know what? In the next quarter, for the next 6 months, even though I got this cash balance, for the next 6 months, I don't need this portion. We can safely operate with this much cash. So let's stick that in a CD, a government security of some sort. That's what that is. It's not a big deal. And I'll show you exactly how you can look at that and where he discloses that. But it's going to be in the K and the Q. Both of them have certain disclosures. So you got to read both. They're both out. And then the other thing we look at in cash flow for investing is this CapEx. CapEx is really small right now. He's made that half of what it was year over year. If there was a call, I would love to understand if that is the ongoing capital expenditure. Now, why it's a confusion point to me that it might be the ongoing expenditure is because for sure, what I saw in the disclosures, they are definitely continuing to make progress on the e-commerce portion of their business. So there is a lot of this is online versus stores, etc. Nonetheless, if they didn't have physical stores, there would be even lower depreciation and amortization. So of course they do still have stores. That is what it is. All right. Now, that's the cash flow statement. Now we go into cash flow from financing. Again, I just talked through what the marketable securities is. Proceeds from maturities and sales of marketable securities. So this is just usually interest that's coming off those CDs, and then they're just rolling it back into more CDs is what's happening. That's why those numbers are going to be a little different. Repayments of debt, 5.4. So in general, GameStop more or less issued stock during their mean period to get rid of most of the debt. So this is a real baby debt payment still. I'm going to go through it because it matters, because it's a turnaround. And then this one too, decrease of cash and cash equivalents and the restricted period, 280. Apparently there were some lease payments. It actually does come from that accrued from above and debt. So it was a mixture of this 280 is what happened there. Okay, now given that context, given those things that I pointed out, we go into the balance sheet and we talk about what we see. All right, now we look at cash. And I really, even though cash and cash equivalents is usually what most people are going to use for their metrics, these days, because of the nature of what marketable securities actually is, which is just government CDs, okay? In the past, it's not always been that. And if you're in a financial company, that's not a safe assumption, okay? But if you're in like just a regular old company, 2023 rates going up to what they're going up to, marketable securities is a cash equivalent if you're going to be doing it, because that thing's going to liquefy in probably 6 months, maybe a year, depending on what their CFO decided was the appropriate way to handle their cash balance. And so to me, if you're excluding this 300, that's a little strange. So when we look at the cash, I'm going to say, Mei Ling, I'm going to say 1195 versus 1390, which is just adding these two numbers together. Okay. So we do have about a $200 million draw of cash. That's in line with some of the other things that we talked about. Makes sense to me. Everything's synchronizing up pretty well. Inventories, merchandise inventories are down 8% year over year. That's this column adjust and then compared to this column. And then this was last quarter. So it seems to me, because he hasn't had calls, it's hard to confirm. It seems to me that he's probably targeting an inventory lower than the past. Totally makes sense in this economic environment, right? So if I had to guess, just looking at the numbers, I would think he's targeting a 680 million inventory. Okay, now I still wish there was a call so that I could understand what's going on with the collectibles, because my suspicion is most of this is collectibles. So that kind of is what it is. And there may also be, as you guys that are bigger nerds know, fluctuation in that collectibles market that is doing something a little funky there too. That would be like, if I was next level due diligence, I would be intrigued on that. Okay. So that's that part. Oh, and now let's go down to these accrued liabilities and current liabilities. This is down significantly from last year. Apparently, it ticked up before it ticked down. So we got to figure out what this accrued is, because it's flapping in the wind in a strange way. And then on the debt, you can see that from 32, I wish they would have done it like last quarter and then it's easier. So 32 was last year, 28 was last quarter. Then we paid some of it down, 23. I would love to understand their debt. Okay, the operating leases, other stuff, that's up. That's probably from operating leases is typically a really limited number of things, so not much you can do there. Okay, so let's actually look at what the accrueds are in the 10Q. You're gonna have to look at the Q, and you might get even more clarity in the K. I didn't go through the K as aggressively as I normally would. So I really went through the Q and the release. But if you look here, you can see what the accrueds are. The accrueds really are unredeemed customer liabilities. So this might be somebody has a gift card, something like that. Extended warranties. So hopefully everything goes swimmingly. The 82 million isn't really that big of a deal. Sometimes the way they do it, sometimes the way they do it, the warranties are just an estimate of what's happened in the past. If you know this company a lot better, then you'd know which one it is. I don't know the company better than anyone in particular, but I would probably look for a note that explains what that warranty is, because people show it's both ways sometimes. Okay, and then subscriptions, that's just going to turn into revenue, so that's fine, right? So it's just going to make but that's only 40, right? And then contract balances as well. These are these are like gift. So the gift cards, extended warranties. So it's weird the way that they showed it. This is 286. That doesn't give me the total of all accrueds on the quarter. And it may be because what they're showing is from this quarter to this quarter, or I'm not sure is really what the answer is. But at least this gives you a sense for the composition of those accrueds. Now, I'm not the end all be all of accounting. Okay. So I don't think there's anything misleading or wrong in these numbers, so much as I just need to do more time with more of their earnings reports to understand how they particularly like to demonstrate the accrueds. But that's approximately what's going on there. Nonetheless, this number is getting lower. And the reason that we're going through the mix of the accrueds is to try to understand if we could get it even lower, because that's right now, if we go back to the cash flow statement, that's the bulk of what's draining your cash is the accounts payable and accrued liabilities. Okay, so that's the last piece. And then finally, the only other thing I'd share is that I looked up in the debt section, they discussed the bonds that exist on them. There's a bunch of these, but then there's a bunch of French bonds. That was 40 million of the very, very tiny baby bond amount issuance that they have. And these are at an interest rate from 0 to 0.7%. So I really could care less if they ever pay that back, to be honest. If that's your rate, knock yourself out. Okay, that's my read through the financials. To me, it looks like they're in like just after that first inning. of a turnaround. In other words, what you typically see is we got to stabilize the company and make sure it has plenty of runway to do its thing and figure out what's next. It's already gotten rid of a bunch of businesses that were probably burning capital like crazy. So it puts it in this first inning of a turnaround. Now, on valuation, I'm going to let the rest of the world do it, because your challenge with valuation on a turnaround is some people will be like, oh my God, this thing will never make money, blah, 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 blah. Some people try to do it to a sales number. Ultimately, you can't do it to earnings, and you almost can't do it to sales, because what happens if he can get this thing more profitable is this net loss number becomes like a gain almost immediately after you just eliminate one or two things. And so this thing spins on a dime and is suddenly undervalued. So I hate doing valuation work of that nature. What I like to do is maybe use a comparable and then try to figure out what might be the earnings profile of that and what do they then value the whole company at. And also, the other thing that you want to do is just figure out during the turnaround period is how much more of this company has to get chucked out into other pieces or is going to get sold or whatever it is. And then what's the stub worth? What's the two pieces worth, such that you could get a sense for what you'd ever pay for this thing. But that's beyond the scope of this. All I wanted to do really was cover all I really wanted to do was cover the quarter. So hopefully for those of you that are really good at financials, I didn't totally see something different than what you did. And for those of you that just wanted to hear a second opinion of the financials, that's how I looked at them. And I'm happy to have someone tell me otherwise. So let's go through some of these. Manuel, thank you for stopping by. Electronic thrift store, who goes to buy video games from a store? Well, they have the electronic business, which I think is becoming a bigger percentage of revenues. In fairness, I wouldn't mind seeing that broken out in the future. Mr. Cohen, if you have someone that's actually scraping for all social media, I think that would be lovely for your investors to see. Not sure if that's a possibility. And then, that would be cool. Love buying physical copies of the certain games. Yeah, some people do. That's a real thing. So Noir Desire is part of that group that's buying the physical copies. Very cool. Thank you for stopping by, DM. Why are you trying to dilute? Oh, no, I remember you wrote this comment when we were looking at the share count, the giving people shares and stuff. That's a really tiny, that's a baby tiny dilution. It's probably can be bought back. All right. PB, thanks for stopping by. DM, really appreciate really appreciate you stopping by as well. That's it for this episode. I hope this was helpful. And I definitely do consider what other people like. So if either put it in the comments if there's something you really want me to look at. It may take me a while because I am also trying to live my best life, and do my own trading book. But also you can always tag me on Twitter as well, and I'll do the best I can where I can. Have an awesome week. Bye, guys.